Kangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB. I'm Juliette Sarli. Great to have your company as we round out another trading week, and we are positive for the week, but we're back to where we were at the beginning of the year. Let's have a look at the CBO 200 as we finish the day's trade. It is up 1/3%. The S&P ASX 200 is firmer as we head into match off, also by 1/3% to 8,643. A lot of hope about the US and Iran getting close to this agreement to end the conflict. But I did have a chat to Steve Goplan from Skander FX last hour, and he said, look, oil and FX traders are definitely going to be on edge, particularly given that there might be some more posts coming through from Truth Social that could really set off some movement in futures. And don't forget that US markets are closed for Memorial Day on Monday. But to the themes of our day, well, guac and roll. Guzman y Gomez learning you cannot sell ice to the Eskimos, pulling out of the US market. Also powering higher, these gains coming as oil rebounds after 3 days of declines. These statements by Iran on uranium and the Strait of Hormuz, seeing Brent crude around $105 a barrel. And what a roller coaster of a week. We were up, we were down, we were up again, and over the course of the week, as I mentioned, up by 0.4%. Let's have a quick look at what we saw with some of the energy players on that movement in crude oil. Santos finishing the session up by about 1.5%. Woodside, though, is in the red. The miners had a good session today. BHP getting back towards those records. $59.57 is where the big Australian finishes the day. The banks, well, they were mostly positive as well. CBA, they're up by around 1% to $165.61. Just want to get you more on what we saw with Guzman and Gomez, because shares did skyrocket today after it announced it will cease trading in Chicago immediately and will recognise a one-off impact of 30 to 40 million US dollars. Now, GYG says the financial performance of the US hasn't been acceptable. It's not meeting its targeted hurdles. It's going to continue to really just focus here on the Aussie business, with Citi analyst Sam Teeger saying that the decision to exit the US removes a key earnings drag. Now, we speak to Stephen Marks every reporting season. We spoke to him in February and we asked him of any plans to exit the US then.
You know, we have a real point of difference in the market. We've tweaked our narrative and marketing a touch, and you know, I've built, you know, it's been 20 years in Australia. You know, we've got restaurants in Singapore and Japan, and the signs I'm seeing here show that the US will pick up quicker than it was obviously to build in Australia. So we're very optimistic for the future in GYG. And with it comes obviously financial discipline. You know, we've got board approval for 15 restaurants. We got 8. We got 2 more opening up this year, and we'll continue to build obviously revenue. You know, our cost of goods is getting stronger with our supply chain, and we're optimistic for the future here.
But it wasn't to be. All right, well, those gains did boost the discretionary sector. JB Hi-Fi was up 0.7%. In other corporate news, Tuas was lower after terminating its $1.5 billion agreement to acquire Singapore's M1. We saw Appen skyrocket higher there after reaffirming its 2026 revenue guidance. Mayne Pharma also did well. It won almost $14 million in legal fees from US pharmaceutical giant Cosette. And Monadelphous also had a good day after securing about $120 million in new construction and maintenance contracts. Let's welcome to the COB our favourite Friday guest, Shane Oliver from AMP, who joins us. Shane, good to see you. I mentioned before that, you know, we're going to take a little bit of concern heading into this long weekend with the public holiday, and a lot of focus here on what it means for the oil markets.
Yeah, I mean, long weekends can cause distortions in things, but mainly in the sense that investors might be more cautious heading into them. In other words, not wanting to have long positions. But I think the story around oil remains basically the same, that on the one hand, investors are hopeful there'll be some sort of deal, and that is putting a cap on oil prices. That's why oil prices haven't sort of surged higher to $150 a barrel, which they might normally do if you've got this sort of hit to supply globally. But by the same token, we're yet to see that deal. We're yet to see the Strait of Hormuz open. There's, I guess, a degree of skepticism that a deal will be reached soon. and that's probably putting a bit of a floor on them. Now, obviously, the futures market is still assuming that ultimately there will be some sort of deal, and that's why you can see that downtrend from current levels. But time will tell as to when we're going to get to that point. It may be in the next few days. Hopefully it is. Touch wood, fingers crossed. Maybe it is. But by the same token, this could still drift on for a while yet, as Trump might want to provide the taco to get out of this. But by the same token, we're still waiting for the taco sauce to sort of be provided by Iran. And, that's obviously creating these bouts of uncertainty.
Yeah, there is. And lots of chat about tacos and burritos today with the GYG news as well. That filters through into share markets. What are we seeing as global share markets sort of grapple with all this uncertainty and hopes of a peace deal?
Yeah, it's funny, that GYG stuff. I saw the headline there. It seems odd that when you're exiting a market, exiting the US, that your share price goes up. But I guess sometimes investors like to see a company cutting its losses and getting out of a situation which may have been difficult. But overall in share markets, we've seen a bit of an upwards drift over the last week. Most markets are up. I think the exception there is the Chinese share market, but the general trend has been up. That chart, of course, says a whole range of things. Australia, of course, has been a chronic underperformer. We're not quite as bad. If you add in the dividends, we're not quite as bad as that chart would suggest. But still, as you were mentioning in the opening there, we're one of the few to be only around line ball with where we were at the start of the year, whereas other markets are in more positive territory for the year to date. But I think we've been held back to some degree because, unlike the US, we are a net oil importer. We are a net energy exporter, but we're a net oil importer, whereas that's protected the US relative to Australia. We don't have the AI exposure. And of course, our central bank has been a lot more hawkish than other central banks around the world, although there are a few who have moved towards tightening. Bank of Indonesia in the last week, Norway a couple of weeks back, and it kind of looks like the Fed is potentially heading in that direction too if their inflation rate doesn't come down. But nevertheless, all of those things have weighed against our market to some degree, and we've got the added uncertainty locally about the tax changes, with the media continuing to have a field day around this. It reminds me of the aftermath of the Joe Hockey budget from 2014, which saw a lot of spending cuts, and that saw a furor dragging on for weeks and weeks, and of course a lot of that budget was never passed. And you're seeing something similar this time around. More of it might get passed this time around because of the government is in a much stronger position. But obviously that's potentially also weighing on the share market to some degree.
Absolutely. And you know what else happened this week was that big move in bond yields, particularly the 30-year. I mean, does that give us concern that we're going to see something like a GFC again?
Well, it does provide worries, and the main worry is that share markets, many share markets are trading on relatively high PEs or low earnings yields, and they don't provide much of a risk premium relative to bonds. When you look at the earnings yields on Australian and US shares and then compare that to current bond yields, pushing towards 5%, a bit below in Australia, but heading up in that direction in the US, then the risk is that could cause a valuation problem. And you can see there that rising trend. We saw that downtrend, I guess, putting Japan aside, into around November, and since then most countries have been seeing a bit of a rising trend. Unfortunately, I don't have Europe on the chart there as well, but that backup in bond yields could become a problem. And it reflects obviously a bunch of things, but the biggest concern is that the oil supply shock will be inflationary. That will boost inflation expectations. Central banks will have to respond to that with rate hikes. And of course, at the same time, the US budget deficit continuing to blow out, and CapEx spending in the US remains very strong. We're hearing more about IPOs, I think Elon Musk in the last week, and those sort of things are leading to strong corporate borrowing, mainly in the form of corporate debt, but it obviously still has an impact on the bond market. So that's certainly one to watch. I don't think we're at crisis point yet, but it could be a problem if it continues.
All right, let's get back more to what we saw in our market. We had the jobs data this week. I saw your note. You're now saying maybe still a rate hike in August, but certainly it looks like June is off the table.
I think June is off the table. You never say never. It's always possible. There is some inflation data to come out in the week ahead. Maybe that changes things. But we did see those softer jobs numbers. I'm conscious the jobs numbers do bounce around quite a lot. But by the same token, you look at that chart there, you can see job openings are well down from their highs. There were some signs of stabilising, but maybe that trend could resume on the downside again. And therefore maybe the jobs numbers are telling us something, but the Reserve Bank probably won't know. And these are the last jobs numbers before the next meeting, believe it or not, even though it's not till mid-June. So that means that it's one argument for the Reserve to hold. We saw the minutes, which used similar arguments, basically that the 3 rate hikes had given the banks some space to consider things. And I think that's what they'll probably do in June. But ultimately, given the inflation pressures, as evident, for example, in the PMIs that came out yesterday for Australia, I think the Reserve probably will hike again, but we're going to be waiting till August.
And I guess the other thing is looking at how gloomy we are, particularly in the wake of the budget. Consumer sentiment, rebounding a bit, but still in the doldrums.
It certainly is. One measure is particularly gloomy, the Roy Morgan survey. The Westpac survey is not quite as bad. My colleague Diana Messina put out a note on this, how we're always whinging in Australia. Maybe there's some truth in that. Maybe we get happiness out of whinging. I sort of wonder about that philosophically, but if you look at a lot of the surveys, they are showing us to be somewhat gloomy in recent times, and whereas the underlying economics probably isn't quite that bad. But the reality is, if you just take those numbers as they are warning of softer conditions ahead in terms of consumer spending. And you can see in that chart there that house price growth expectations, the yellow line starting to soften, which possibly tells you that the red line, the house price growth momentum, will start to roll over. And of course, the blue line shows that consumers' sentiment towards housing as an investment is now a good time to buy a dwelling is extremely low. And so those things are also warning of weakness ahead in the property market.
Certainly are. All right, Shane, let's end on a high, even though it's a little bit of a downer, because I want to ask your thoughts on Eurovision. Delta was robbed, but my goodness, it was an amazing performance.
Oh, it's a fantastic performance. I thought it was the best performance
100%
at Eurovision. I must admit, I kind of like that song the Italian guy had, Sal, I think his name was. Not even good tune, but Delta's one surpassed that dramatically, and it was far better than, what was that other thing, Bangarama or something?
Yeah,
rubbish. Bangarama, which was one of those sort of novelty songs that you'll sort of forget about fairly quickly. But I mean, maybe it's going to be hard for Australia to win Eurovision, but the fact that we got so close yet again, if you recall 2016, 10 years ago, Dami M, who actually was on the Eurovision Grand Final live from Sydney in allocating the votes from Australia, she got similarly very close back in, she made it to the Grand Final anyway. Back in 2016, but maybe I guess given the way the voting system works, we perhaps won't win Eurovision. But the thing is, we are in it at least. I think that's really positive. And more broadly, it gets to be really excited about when you look at Eurovision and the history around it. There's an amazing documentary on SBS called The Song Contest, which is about the 1968 winner in Eurovision. And if you want to find good, catchy tunes, you don't have to go much beyond Eurovision. I'm not going to go humming Bangarama or something, but Delta's song is a good head candy thing. But that 1968 one, I also found quite good head candy as well. It was called La La La, and there's an interesting history to that because the song was submitted to a TV station in Spain, who asked for suggestions because they wanted to win the Eurovision in 1968. So they had a contest in 1967. It was one of the songs that came in. The guy who I think was amongst the group that submitted it, he actually ended up singing it initially, but he's from Catalonia, Barcelona and so on. From Catalonia, they want to separate and so on. And he wanted to sing it in Catalan as opposed to Spanish. That led to a bit of a furore. He said if he can't, that he's going to resign. The TV channel said, okay, we'll accept your resignation. And they get this other singer in who takes over in the last few days. And then she ultimately wins the contest for Spain, singing the song, La La La. Now, of course, not many people would know La La La, but it is worth checking out. It's a great tune. I personally think it's actually better than Cliff Richard's Congratulations, which I always found to be a kind of annoying song, but it was the UK entrant in the same year. Anyway, there's a bit of history for you. The other thing, when you watch that song on YouTube, there's a full orchestra there. And apparently full orchestras were mandatory up until 1998. And since then, it went electronic and pre-programmed.
Shane, you never cease to amaze me. I thought you'd have a little comment on Delta. I didn't know you were a walking encyclopedia of Eurovision. We love it. Thank you. Have a great weekend.
Okay.
Shane Oliver. Isn't he the coolest economist ever? All right, let's get back to equities. The stock of the day was Guzman y Gomez. Andrew spoke with Luke Winchester from Merewether Capital, Claude Walker from A Rich Life.
The problem is, if this is just now an Australian story, this valuation has to come down significantly. And the problem is that we have a pretty good peer on the ASX in Collins Foods, has a dominant fast food franchise here in Australia, trades on about half the valuation of what the Aussie business does for Guzman. So I know we've had a bounce today. I think longer term, short, medium term, we now see this start to pull back and start to reflect that this is only just the Aussie operations now and that valuation has to come back. So I'll say a sell, Andrew. I think if you're there, today's giving you a pretty good opportunity on some short covering to exit the stock.
I would also sell the stock. It's hard to add too much more to what Luke said, but the question is, does Australia have the appetite for that kind of gunk food? And maybe it does, maybe it doesn't. Collins Food is a decent business that's been going around for a long time. So I think it could survive long term, but as Luke says, it's got a long way to go before it's trading in the ballpark of reasonable multiple. I have it on 24, 25 times underlying EBITDA of the Australian business. Underlying EBITDA is a very gammy number. You don't pay 25 times that for a mature-ish business.
10 stocks picked by you, 2 experts, 1 hour.
Let's get to the companies that have been nominated by you.
It's like a witch hunt over there. Everyone hates data centers.
Just remember that most of their earnings are offshore, so there's no franking credits.
The call is brought to you by Centuria, an ASX-listed property fund manager with $21 billion in assets under management. Want to diversify beyond equities? Explore the Centuria Sydney CBD Prime Office Fund at centuria.com.au.
Let's have a look at the market leaders. No surprise, GYG is going to be at that top of the board, and 4D Medical also had a good day, up by 10.5%, along with Paladin, Silex and Imdex. The laggards in today's session included Telix, and there we'll have a look at the small cap winners as well, with Anteris Technologies there, up by about 18.5%. Let's have a look at some of the small cap laggards as well, with Pacific Edge down by some 16%. All right, tonight we are looking out for the German IFO Business Climate Survey, Eurogroup meetings, the US University of Michigan Consumer Sentiment Survey, and also some retail sales from Canada. Nadine's not here, so I can't say A, but I'll say it anyway. All right, let's have a look at what's coming up next week. We've got US Memorial Day's holiday. At home, we've got April CPI, first quarter private CapEx, private sector credit, and earnings updates, AGMs from a number of companies, including Flight Centre, GMG, Nufarm, Webjet, and Life360. And then if we have a look at what is happening more globally, we'll get US May consumer confidence, that core April PCE data, and the RBNZ decision. Steve Goplin from Skander FX telling us to watch the Aussie Kiwi cross on that. Let's see where the local market has finished the session, with the CBO 200 there up by 1/3%, and the S&P ASX 200 up 0.4%, 8,657, with a gain of 1/3% over the week, meaning we are exactly back to where we were at the start of 2026. We'll see what next week brings, hopefully some sort of peace resolution in the Middle East as well. Have a great and safe weekend, and we'll catch you on Monday.